Good afternoon, everyone. I'm Rose Jacobs, live from the Kalkine studio in Sydney, and you're watching The Early Trades, a show where we share with you a glimpse of the Australian share market opening trade scenario, along with the global and domestic drivers triggering the market momentum. So let's get started. Miners and big banks have weighed down the index at the start of Friday's session, with the ASX 200 dropping 0.3% in the first 10 minutes of trading to sit at 7,393. Iron ore dropped 5.8% overnight, and its impact was felt this morning, with BHP starting the day 2.8% lower, while Rio Tinto lost 2.9%. Lynas Rare Earths dropped more than 6% after the release of its quarterlies this morning. Meanwhile, Qantas surged 3.4%, with the company confirming plans to bring forward dates for resuming domestic and international travel. Tech stocks were the strongest performers early on and is up 0.7%, with WiseTech advancing 2.4%. Afterpay up 1.4% to $128.08. The big four banks all started the day with losses of 0.5% or more. The local currency slid 0.7%, falling below US 75 cents. In a release, NAB said the Aussie has gone from hero to zero in the last 24 hours, falling from an intraday high during our session of 75.46 to a low of 74.59, I should say. Looking at the important overseas data, Japan September CBI, October manufacturing and services PMIs, and market manufacturing and services October PMIs for Eurozone, UK and US will be released today. UK October GfK consumer sentiment, September retail sales is also on the cards. Big news coming in from the US. The Chicago Board Operations Exchanges Volatility Index, also known as Wall Street's fear gauge, closed Thursday at its lowest level since before the pandemic hit, as strong earnings pushed stocks to record highs. The VIX closed down 3.1% at 15.01, its lowest close since February 19, 2020. The VIX has averaged at 19.71 in 2021. The VIX is a measure of market expectations of 30-day volatility and can serve as a way to gauge fear among market participants. Other news impacting the markets. Market implied expectations for US inflation for the next half-decade surged to the highest in 15 years on Thursday, or Friday, Australian Eastern Daylight Time, as investors hedged against the risk that consumer price pressures fail to abate. The increase in the breakdown rate for 5-year Treasury inflation-protected securities was particularly striking, as it coincided with the biggest ever auction of the securities. And now let's quickly glance at this morning's newsmakers. Qantas says all of its Australian-based employees will return to work by early December 2021 as it brings forward the restart of a number of international flights. Qantas will launch a new route from Sydney to Delhi on December 6 and will resume a number of other international routes before the end of the year. Qantas Group CEO Alan Joyce says that the Australians rolling up their sleeves means their planes and the people are getting back to work much earlier than expected. Travel agent Hello World reports total transaction value climbed 50.7% in the September quarter, with revenue up 62.7%. Its EBITDA loss for the quarter finished at $3.6 million versus a loss of $6.3 million in the prior corresponding quarter. Management said it has sufficient cash to maintain operations beyond 2022 based on current liquidity levels and cash burn rates. It described the reopening of borders as incredibly welcome news. Insurance Group Australia's outgoing chair Elizabeth Bryan is bracing for shareholders to vote against the company's remuneration report at the annual general meeting today, after 2 years of disappointing financial results. She said both this year and last year have been challenging for IAG, producing results that have been disappointing for its shareholders and for all the stakeholders she is speaking to today. IAG reported a full-year loss of $427 million in August after it was forced to put $1.15 billion aside for business interruption policies due to a poorly worded insurance policy that meant IAG was liable for small business claims to cover losses associated with COVID-19 lockdowns. Rail operator Aurizon has announced a $2.35 billion deal to acquire One Rail Australia from Macquarie Group. Aurizon said it would fund the cost from existing and new debt facilities. In 2021, One Rail Australia posted EBITDA of $220 million. Malaysia-based rare earths miner Lynas has blamed COVID-19 cases in the country for shutdowns to its operations that contributed to sales falling to $121.6 million over the September quarter versus $185.9 million in the prior quarter. Well, that's it for now on the early morning trades, but stay tuned to Kalkine TV as we have many more shows lined up for you, sharing live updates across the economy, markets and sectors. I'm Rose Jacobs, signing off.